The average long-term U.S. mortgage rate dipping for the fourth straight week. Mortgage buyer Freddie Mac reporting Thursday the average on the benchmark 30-year rate dipping from 6.28%, rather from 6.32 to 6.28 from the previous week. Joining me now to talk about the current real estate market is Corey Burr, founder of the Burr Group and vice president at TTR Sotheby's Realty. Good to see you, Corey. Let's talk about this because it sounds like inventory is still kind of low, but this may be incentivizing some buyers to get back out there.
Most definitely. Inventory is down about 20% relative to this time last year, but with interest rates dropping about 0.5 or 0.75% in the last couple months, buyers are out in force, particularly right now at the height of the spring market.
What about ARMs? I think that we talk about refinancing. Maybe now is not the time to do that because it just doesn't make any sense. But are ARMs something that you're seeing people say, you know what, maybe I can hold out for 7 years and then the rate hopefully will dip then and I can cash in on that?
So the number of ARMs increased from about 10% to about 50% of the marketplace.
Wow.
And that is just the shock of rates having gone from sub 3% to north of 6%. So there are a lot of buyers right now who think they can ride out these high rates and refinance at some point in the next 3 to 5 years.
And are we seeing a big difference from, say, a 30-year mortgage to a 7 ARM? Is that something like 2%, or what exactly is the difference there?
It's not that much, unfortunately. It's really only about 1%.
Okay, well, it's better than nothing, right? Over the long term of a mortgage, I guess you could see some savings, especially if you're looking at it month to month and hoping to move or change there. Corey, let's talk about the inventory, because obviously we kind of live in an insulated market, if you will. This is a market that pretty much holds through the test of time. But regardless, we're kind of seeing a little bit of what we saw during the pandemic, that people are still going over asking in some of these cases.
Most definitely. We've got a split market in that the first weekend, it's a seller's market. And if a property is well priced and presented well and in a great location, there's going to be multiple buyers looking to buy that property. However, after about 2 to 3 weeks, the market turns and it becomes a buyer's market for any house in any price range. So the advice for sellers is you've got to present your property well and you've got to price it terrifically to get that initial interest by buyers.
Especially with the do you see a shift here happening shortly?
Well, I think the rubber's going to meet the road after the height of the spring market. So sometime in the late summer and fall, we're going to see if the rates moderate a little bit more and if the economy continues to do okay. To me, the Fed is landing things pretty darn well right now. We've got a nice jobs number that came in not too hot today, and interest rates have come down about 0.75%. And if we can continue on that trajectory, I think we're going to be okay.
Yeah, employers kind of starting to pause on that hiring spree. So we'll see what happens. Corey Burr, founder of the Burr Group, with us tonight on Fox 5. Thank you.
Thanks, Marina.